Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me to the start of the week. On Friday, the Australian dollar has extended its steep decline. Now for the last 5 trading days, the market is now probing beneath the 69-cent handle and pressures increase as fears of another RBA rate cut may be on the cards next month. The Australian dollar downward pressure has increased due to the disappointment of last week's May employment figures that were released on Thursday. The Australian Bureau of Statistics, the ABS, released its labour force report for May, which registered a substantial increase of jobs for 42,300. But looking into these numbers, they weren't as good as what the market may have been expecting. The part-time roles came in at 39,800, while the full-time jobs was 2,400. Also, the unemployment rate missed its forecast of 5.1 and came in at 5.2. Looking at the technical implications, from the break of 68.95 gives further indication to the downside, with the immediate support seen at 68.65. I do assess that the market is looking lower and towards the region of 68 cents, and reassess from there as we could see some profit-taking return. As you can see, the euro fell further on Friday after the recent bearish outside range day was confirmed from the break of 112.70. The outlook now looks to a target of 111.60 and reassess from there as we could be even looking lower to 110.70.85. Now this week, all eyes on the US federal rate decision, which is this Thursday. The meeting is between on the 18th and 19th and is assessed that the market will see the Fed hold rates, although there has been some speculation, along with President Trump, that they may turn more dovish and therefore could pressure the US dollar. I don't think it will fall that much because overall the bias is still to a hawkish outlook, but nevertheless, Jerome Powell was, in his last meeting, a little bit more on the dovish side. Still, the dollar did increase on the late of last week, and which helped the move through the level of 112.70. So look towards 111.60 and reassess from there. From a technical point, we are marrying up, which does support my view. For the 11th trading day now, dollar yen is still uncertain to its direction, but trading sideways and increasing little to the upside, with the resistance still remaining around 108.70.95. A break above there would give further scope towards the region of 109.75.85. From a technical point, it has strengthened and nearly pretty much married up, and therefore we now wait for the break. If so, then I do expect to see stops being triggered. The pound plummets further on Friday. Looking at the economic outlook, though, the UK has struggled, according to the latest data release, with the GDP which fell by 0.4% in April, the month after the country was supposed to leave the EU. Economists are unsure if the downturn is temporary or just a response to March stockpile. Nevertheless, there is also speculation that Boris Johnson may have one foot in the door. The former Foreign Secretary has overwhelmingly won the first round of Conservative Party leadership contest with 114 votes, leaving his closest competitors far behind. He is all but certain to be on the shortlist that the party membership will vote on, and he is very popular amongst members from the reports in the UK, reading the newspapers. From a technical point now that we've broken the level of 126.50, does look towards the region of 125.55 to 125.20. From the technical point, we are breaking down. Gold over the last few days has gone from 1,325 to 1,338, and then from there it surges above 43 on Friday and posts a fresh 14-month high of 1,358 before dropping sharply back to the level where it started from, around 1,340. Well, the upside reached. I'm now sitting out. I feel that this candle, the rickshaw, could be a little bit on the bearish case. But nevertheless, we do have a lot of reasons to see the market actually rally back to the top side. But it all depends on now if Fed Chairman Jerome Powell is more to a dovish case. If so, then that would see a further retest to the upside of these highs that were recorded back in February 2018. Wrapping up with oil, nothing to report, still remaining above $50 a barrel, with the outlook still towards 55. Until we break beneath 50, I am bullish. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday poll. And I hope you enjoy the great start to this new week.